just a little bit about me, and then I'm going to give you a ton of information. Probably you're not going to retain a ton of it, and that is fine. This is just meant to give you as much as possible in the time allotted. And if your takeaway is that now you know someone you can ask questions of, and it's okay to ask questions, that's perfect. My name is Jenna. I've been working in like accounting and bookkeeping for maybe 15 years. And my path to this work was not intentional. I was a women's studies major at PSU 1 million years ago. And then I was going to try to be a mental health practitioner. And I was about to start grad school. And one of my closest friends got diagnosed with terminal cancer. So I kind of took a break from my studies. You know, things happen in our lives and we switch and pivot. And I didn't start school. And while I was on break, I was living with a friend who had a small business. And my friend needed help paying bills on time and keeping track of things, and knew that I was pretty diligent with things like that, although I had not been a bookkeeper before. And so he asked me to help him in exchange for rent, and I could not refuse that offer. And one thing led to another, and I learned how to like keep track of money in and money out for his small business. I met his tax person, and I thought, this is interesting. I can apply a social justice lens potentially to the tax code and money and how I talk to people about money. And I can use this kind of relational work that I'm interested in a different way. And that was how I got into this work. It was definitely not the path that I chose. I was not in business school. This wasn't something that I thought I was going to do. And here I am all these years later, and I found my path for now. As long as there's money being exchanged, I'll probably be trying to help people navigate it and redistribute it. So with that being said, let's start this slideshow. There'll be a break at some point, but it's going to be chock full of info. I welcome you to put questions in the chat. I will ask anyone have any questions. You're welcome to raise your hand and talk to me. You're also just welcome to listen and then email me. You have my access here. This slideshow, you can email me anytime. And am I presenting right now, Tara? I am? Cool. Okay. It's been a minute. So I like to start this work off with telling you a little bit about me. No, not presenting?
You're not presenting yet.
All right. That's fun. I literally did this on Tuesday, and I've already forgotten how to present. Okay. Here we go. Okay, now we're good?
We're good. We're good.
Yeah. Yay. Victory. You all are free to go. Okay. Small Business 101, Empowerment Through Education. You have our website, email, Instagram. The Instagram is really full of more things around political organizing and how to get involved in community. And there is money related things too, but it's a lot more of that. I'm going to share my assumptions and values going into this work so you know my location in doing this work. I believe that everyone deserves to have their basic needs met without condition. I believe that capitalism is an unjust economic system and that the tax code upholds it. I believe that money is a resource, and Edgar Villanueva, I reference his book later in the glossary, wrote a book talking about decolonization of wealth and just like talking about how to think about money differently, and to think of it as a tool that we can use together to build community rather than to tear it down or to hurt others. It's about helping each other. And that there's just no perfect way to run your business or do your finances. A perfection is a value of white supremacy, and it's meant to make people feel they're not doing things right. And that's the most common thing I see when I meet with people, is that they assume they're supposed to know these things. They assume that they're already wrong, that their questions are dumb. None of this information is available or accessible at all. So just have, comfort in knowing it is not you. It is an issue with how it's written, how it is delivered, who it is set for, who is meant to uphold and value. So we're just going to figure it out. And then I just want to take a moment to acknowledge that choosing to be a business owner means that you're choosing to write your financial story instead of having it written for you. And that's super powerful. It's not a passive thing being a small business owner, whether it's just like a side hustle you rock forever, or it's your full-time thing. It is really active. And not only are you trying to sell your service or your goods to other folks, but like doing this part of it, this administrative part, is a huge part of the work and something that you have to learn. And I think that's really valuable and a huge asset to your community too. What are we going to talk about today? We're going to talk about so many things today. And then I have this like extensive glossary at the end of all the things I cannot get to, but are also really important. So hopefully the slideshow will act as like a reference point for you moving forward. And there's lots of links in there that you can access in the future and whatnot. We're going to start by talking about the difference between being an employee versus self-employed. And I think that we don't talk about what forms are associated with which, and what does a W-2 look like, and what does a 1099 look like. So we're going to start with getting that like common knowledge and language. We're going to talk about business registration in Oregon. I'm not a lawyer, so I can't give you advice about this, but I can tell you the basics. What is self-employment tax? Just something you should understand if you are going to be self-employed. A lot about income and expenses for businesses, record keeping tips and tools, and then we'll finish up with quarterly taxes, local taxes, and what to do about letters from the IRS. So the first thing we're going to talk about is just the difference between being an employee versus being self-employed. And a lot of it, at least at this level, comes down to forms. So when you're starting to work with someone and you are unclear about what this relationship is, I mean, you shouldn't be, but often we are because the language we use sometimes is a little bit confusing. Sometimes people will say they're freelance or they're an employee and they're actually freelance. Sometimes they're like, I'm a contractor. Are you an employee? Are you self-employed? The forms are really is going to give us that information. If you are an employee, you will get a W-4 form when you start your job. These are sister forms. The W-4 and the W-2 work together. The W-4 is what you fill out when you start a job as an employee. None of us know how to fill it out, including me. You have to say single, married, am I head of household? And then you put maybe you have kids, and maybe you say you have another way of making money. And all it's trying to do based on your answers is guesstimate how much tax to take out of your paycheck for the IRS in Oregon. It's just a guesstimator. So it's like having you enter these answers to these questions and using it to figure out how much tax come out of every paycheck. So when you file your taxes in April or by April, you get money back or you owe. The W-2 is the form that you'll get in January. We're going to start getting them now. And that's the sister form for the W-4. And that denotes you are an employee. Taxes come out every time you're paid. So that's why your check's light. You know, you get your hours times your wages, and it's never that. You're like, what are all these numbers? Well, that's a bunch of tax withholding. Why are we not taught to understand these things at a young age? Why are we not walk through what a pay stub is and how to read it so that you can make sure that things are appropriate? It's gatekept knowledge. So I want to give you access to that so you can advocate for yourself and understand what's going on. The other thing is that you can't take expenses. So all that means is when you get your W-2, that's it. There's no like more tax negotiation. That's what you've made for the year, and that is what you have to claim on your tax return if you file your 1040, which is the form that we file for personal taxes, and that's it. So if you have to pay for things out of pocket and you're an employee, it's something worth talking to your employer about to see if you can get reimbursed for those costs. It doesn't cost them extra to do that. Like payroll costs them something. If they reimburse you, they don't have to pay additional taxes, neither do you. So if you're finding yourself have out-of-pocket costs for your employee job, it doesn't hurt to ask. If you think it'll jeopardize your relationship with the boss, then obviously don't do that. But it's just something to think about when you're negotiating maybe a new job. Being self-employed, the things that I want you to be mindful of is if you get a form, the W-9 is the form that you will get. And conveniently, the W-9 and the 1099 are sistered forms. So if you can remember that nines are the self-employment number, you're going to be in good shape. So the W-9 is a lot simpler. If you get hired as a contractor, you're going to fill out your name or business name, your tax ID, your address, you're going to sign it, you're going to give it over to the person who hired you. They're going to add up what they paid you for the year, and then they might issue you a tax form called a 1099. We're going to talk about this more throughout. So those are the forms that work together. What you'll notice when you're a contractor or a freelancer, self-employed person, no taxes are coming out when you are paid. So if you are working and you're getting paid $30 an hour and you did 10 hours of work for this client, you will get $300. You will not get $300 minus taxes. The other thing that's different about being an employee and being self-employed is that when you're a self-employed person, you can take expenses. And what that means is when I get paid on a 1099 and it says I made $5,000 from doing this work for the year, for me, that's a starting negotiation with my taxes. It says I made $5,000, but I get to now tell the IRS, but actually I spent X number of dollars to make this money. I paid for advertising. I had subscriptions to Dropbox. I went out for a meal with my client. I had to travel for work. I had all these expenses that I incurred, and your taxes are only based on your income after we account for those expenses when you're self employed. Completely different from when you're an employee. An employee, you get the W-2, that's it. When you're self-employed, you get the 1099, and now we start to try to work it down so we can pay less tax. I'm going to keep going unless I see someone's hand raised or there's a mention in the chat. I don't see anything though for questions. This is what a W-2 looks like. They vary in terms of design, but the general gist of it is that you're going to see your social security number and your name and address. You're going to see your boss's employer identification number, or EIN, and their name and address, their business name. Box 1, 3, and 5 show wages. Generally, they're the same. It's just saying what your wages are, your Social Security wages, which means your income that's subject to Social Security tax, and your Medicare wages. If you're get tips and they're taxed tips for your job, then you'll see a little difference in this Medicare, or sorry, this Social Security box and Social Security box here. Your Social Security wages will be split between tips and wages. If you have retirement through your work, you also might see some differences in these boxes because certain things are subject to taxes and others aren't. But generally speaking, at base level, what you're going to see in box 1, that's going to be what are your taxable wages, and that you would have to put on your tax return, your 1040. The other boxes are really talking about tax withholding. And so this depends on how you fill out your W-4 when you start your job. If $10,000 is all you make for the whole year and you're a single person, you will not owe federal income taxes, and you could probably get something back for earned income tax credit. So you would just get this money back in that case. But I'm just giving it as a filler so you can see that's where your federal tax withholding goes. So when you got paid, it was a little bit light to cover some federal tax, but it also covered Social Security and Medicare. These are taken out of every single dollar that you earn. So 6.2 cents of every dollar you earn goes to Social Security, and 1.45 cents goes to Medicare. A little, piece of information that's important to know is that once you make, I wrote it down and I can't remember, I think it's $168,000 a year for 2024, you stop contributing to Social Security. So everybody who makes under that, including someone who makes $5,000 of wages, they're paying in. But once you get to that threshold number, you stop contributing entirely. So just food for thought over how this money is moving and who's paying what and what percentage of their wages. I'm just making sure that there's no why. Who wrote the tax code? I mean, I'm sure it's tied to the fact that at a certain point you can't collect as much Social Security. But for me and my belief system, I think that should be reversed. I think that as you make more, you should be contributing for sure, if not more. Whereas someone who's making $10,000 a year needs that $620 now, needs that $145 now. So the code is written by people that benefit from it. And Dorothy, I have to look it up. The Whiteness of Wealth is the name of the book. Dorothy Brown wrote an amazing book about tax code. I mean, it's hard to read if you're not a tax nerd, but it does make mention of all these little ways that the tax code is inherently racist and also classist and problematic, and this is part of it. And then state income tax is the other tax withholding. And then Oregon has a pretty high tax rate. It taxes wages at a very low rate. So even though you might not owe the IRS, you might owe Oregon. So some people are like, well, I don't have to file federal taxes because I didn't make enough money, but that doesn't mean you don't have to file Oregon. So it's just something to think about. So I'm going to move on to the 1099 NEC. So this is when You get the W-9 when you start the job, and then the 1099 that says how much you got paid for the year for this client. And it's similar, but way simpler. So it's going to say the business's name, who paid you, and their tax ID, your name and address. And then it's going to say the total you were paid, because no taxes came out when you were paid. So it's the full amount. Doesn't mean you're not responsible for the taxes. So that begs the question, what taxes are you supposed to pay? How do you pay them? When do you pay them? And taxes technically are a pay as you earn system. So as we're earning money, we're supposed to be considering that some of that money is supposed to be paid out to these different departments. And when you're self-employed, it's on you to do that. And for all of us who have been self-employed before or are going to be, there's no welcome packet. There's no like, I'm self-employed. Tell me what I'm supposed to do and how I'm supposed to comply and how do I advocate for myself. This is not a trauma-informed process. This is not a way to help you understand the system and participate in a way that you feel like an agent of the process, right? You don't have agency in this. You are catching up and you are already behind when you start, and that is by design. And so that's why I feel like it is the job of people like me, who's had the privilege to get this knowledge, to share it with you and make it accessible to you. And then you can keep sharing it with other people, that there are ways to do this that we can make work for us. And that it starts with understanding what's going on. I realize that I'm not saying anything that's going to change it, but us interacting with it differently does matter. And in all of my years, all the people I've worked with, no matter the situation, everyone that's kind of got a handle of it or has even had back taxes that they had to catch up has felt relief, kind of knowing that they understand more and that it's less about something happening to them. Let me just make sure there's nothing in the chat. Someone asked, what kind of professional would a freelancer use for tax help? Can any tax accountant help? Are there traits or qualifications? It's a great question. In Oregon, we have actually really strict licensing requirements around education and practice. Nowhere else in the US really has educational requirements, which is frightening. Like, I love an accessible career. I love the idea that people can just like do it without a huge amount of debt and time. But this is a huge amount of responsibility to have when you're helping other people with their money and taxes. And so Oregon does have like an 80-hour training, and we have to take exams, and then we work under people. There's a very short period of education. And so if you're a numbers person and you're interested, let me know and I'll tell you the path, because it's a great way to make money and be self-employed and have seasonal work. But yeah, in Oregon, you can use pretty much anyone from a licensed tax consultant to a CPA. A CPA, probably unnecessary. They have a lot more education. They tend to cost a lot more, and they often don't really center actual small business. It's just not who they focus on. Whereas licensed tax consultants, enrolled agents, these smaller businesses in Portland, we tend to focus on small businesses. And I do have some referrals too. But also, just with any other profession, quote unquote, if someone makes you feel uncomfortable or makes you feel ashamed, get out of there. Like, there's no reason for it. So if someone's not listening to you, if someone doesn't respond to you, I mean, definitely advocate for yourself. But if you're not feeling comfortable, find someone else. Business structure and taxes. And I have like referrals and things at the end. So great question. Here's my chart. I'm just wanted you to see this in one place that's a one page and easy to look at. Basically, this entire workshop has been developed and done so many times with folks, because it's the same questions people ask me all the time. All the time. These are the questions people have, and they want to understand the big picture and how all the pieces interact. So I am going to walk you through this chart. And again, I can't give you advice here. I can't give you legal advice. Questions, and also you can email me if you have other ones. Okay, so this is going to talk about business entity types, tax forms associated with them, and cost, specifically in Oregon. And in the parentheses, it talks about the special filing. It only applies to people who register as LLCs and corporations. There's information in the back of my presentation, but I'm just not going to get into it today. I just wanted to make mention of it. So simplest form, a sole proprietor is any one of us right now using our name and our social security number to do business. So I'm selling goods and services for the purpose of earning money. I am now a sole proprietor. So if I did it under my name, it would be Jenna Golden, sole proprietor. People pay me to that name. I put it in the bank account. It doesn't cost anything to register. And there's no registration, honestly. There's no registration with Oregon Secretary of State. The Secretary of State is where all the business registrations are held on a publicly available website. So it costs nothing. You don't have to tell the Secretary of State in Oregon that that's what you're doing. Most people tend to just use their social security number to attach to the business, and you file the form 1040. So I said earlier, the 1040 is the tax form that all of us file. That's the personal tax return. When you're a sole proprietor, if you do have income from that and expenses, you just add a schedule to the 1040. It's called the Schedule C, and I'm going to show you a picture of that later. So it's just an additional form, just like if you have education expenses and tuition, or you have a rental property, or you have stocks, or you have childcare costs. It's just an additional form on your 1040. Tara, thanks for updating the chart all the time. I have a single member LLC and only use my social security number. It doesn't mean you mess anything up. Don't worry. And also, pretty much everything can be changed. So that's the thing. I know you have the crying emoji, but like we can change things. And yes, you can definitely get an EIN at this point. It would just be, you might have to change your bank account. Your bank account would have to be updated with the new tax ID. We're going to get there. The next slide is just the steps to take to do certain things. So I'm going to talk about the structures and then the steps, and then holler at me if you have more questions. The sole proprietor DBA, so sometimes it's written as doing business as, sometimes it's ABN for assumed business name. That's when you want to use a name that isn't yours. So for example, if Shift Accounting is my business name and I want to do business under that name, not Jenna Golden, I would do Jenna Golden and I would register the DBA Shift Accounting. In Oregon, it costs $50 every other year to renew it. I can still use my social security number if I want to, or get an EIN, an employer identification number, and I still file the same tax form. It's just like the name change. The next kind of level of cost and complexity is the single member LLC. So that's when Jenna is doing business as Shift Accounting LLC, LLC being part of the name. It's supposed to provide liability protection for the owners from what happens with the business. So it's a limited liability company. That's the intention behind it. So I tell clients of mine who own a home, that's a good idea to have that separation between their personal stuff and their business stuff. Clients who deal with people's money like me, I think it's a nice kind of protection. You know, when you're in like high risk jobs or self-employment, you're a contractor. You're in the medical professions. I think it's a really good idea to have that LLC, and it's $100 a year in Oregon. In California, it's $800 a year. So the advice one might give to a business in California is going to be different. So I'm only going to speak to you as an Oregon-based business because that's my specialty, and that's going to relate to most of you. The Secretary of State is the one who handles all these things in each state. So that's who you'd ask your questions of, should you want to move? At this point, I would recommend getting an EIN or employer identification number just for ease. So Kenna, I think it was, you're not wrong for using your social. You're totally allowed to. I recommend, though, getting an EIN at some point because of other kind of ways that this business can change over time. And it's kind of nice not to give your social to people. If you're filling out forms, right? You could just use the EIN number. Still file the same tax form, the 1040 and the Schedule C. So there's no difference tax-wise. So every year I have clients who are like, I'm an LLC now. What does it mean? And I'm like, nothing. It's just a liability difference. It has nothing to do with your taxes. The taxes are exactly the same. They file the same forms and they pay it the same way. And someone asked about using an ITIN. Yeah, you can use an ITIN as your personal identification number, of course. And then thanks for asking, when it comes to these other business structures, if you are considering either of them, and I'll mention what they are really quickly, talk to a tax person. Definitely there's enough like complexity of each of these and enough things that can go wrong upon setting up that please talk to someone who's going to guide you through the process and make sure that you're making the decision that works best for you. I just wanted to show you the prices and the different names of them just so you had that knowledge. The S Corporation or S Corporation LLC is also the $100 a year. You do have to have an EIN at this point. You file a completely separate tax form now. So as an owner of an S Corporation, I would file a business tax return and a separate personal tax return or 1040. I don't recommend clients even talking about this until they've been in business for several years because it is a lot more complex. It costs more to be it. You have to have payroll, which is a whole nother thing you have to learn and pay for. And it isn't until my clients are generating $80,000, I would say, after expenses. So not before expenses, after, that I even start to broach the subject. So most of my clients are not doing this. But there might be a time where you're there and it would be a good conversation to have of what are the benefits and what are the costs. And also tax law changes. So sometimes things are beneficial one year and not the next. So that's another reason to talk to a tax person. And then the partnership LLC is just what a partnership, which is basically we want to do business under a name together. So my Shift Accounting LLC is actually an S Corporation LLC with multiple members. That's one version. A partnership LLC is just a standalone thing where me and Tara would have a business together under one name, and we would file a tax return for the business, and we would file our own personal tax returns. The prices are as shown. You would use an EIN number here, and that's it. It's really complicated being in business with other people. Relationships are complicated. Money is complicated. So my suggestion is if you're considering working with someone else in this way, and neither of you have ever been self-employed, I would try to be self-employed on your own for a little while first, get the hang of it, understand it a little bit before going into partnership, just because there's so much room for things to go wrong relationally. And it costs more to do it. You need to have a partnership legal agreement. There's a lot of like little bits and bobs that you have to think about. Ask for help if you're considering this though. And just for reference, the SSN is social security number. The EIN is employer identification number. ITIN is just another tax identification number. And if you're concerned about your personal information being public record, consider using a registered agent. So all that means is on the Oregon Secretary of State website, if you look up a business name, you will see owners, you will see, the owners, you might see like a lawyer's name, and you're going to see addresses. If you don't have a brick and mortar space, an address might have to be a physical address, which could be your personal address. If you're not comfortable with that, there are people who have mostly lawyers and accountants that will have like a brick and mortar space that will let you use their address, and you pay them a fee. It's like $35 a year. Sometimes it could be like 50, kind of depends on what you want from them. And I put a link to someone, I believe that that link should be live, to someone that I'm using for Shift that I'm super happy with, really easy to communicate with, and they have an address they can use so that you don't have to put your own on the Secretary of State website. Their address is not the address I'm putting on my taxes or my mail. It's just for the public information. Someone asked, can two people married to each other own a single member LLC together? You're not supposed to. So if you're married and you want to have a business together, you have options of either being, God, it's like I forget the title of it, but you can't be an LLC and do it. So basically, when we file your taxes, we take the business and just like cut it in half, 50-50, and put it on two Schedule C forms. And we do it in half. I just forget the name. I've only ever done one for a client. If you're an LLC with your partner, then you would become a partnership. That's generally what people do. So it's either you stay like a partner. You would either stay. You would not form the LLC. It would just be the two of you using one name, and you would split up. And I would ask for help on taxes for sure, because this is complicated. But there are options, but not if you're an LLC. Then you have to be a partnership. And I'm going to keep going because you all know how to use this chat, but interrupt me if you need to. Registering your business in Oregon, these are the steps and these are the websites. So you have it all here and it can speak to your experience. Choosing a business structure, if you are a sole proprietor, just straight up, you can skip to step 4. Step 4 is just City of Portland. I have to plug it because they want us to register businesses when they form. The majority of businesses don't. They just, the first time you file your taxes and you say, I have business income and expenses, there's a form you'll file with the city to basically like passively register. And I'll talk about city taxes later. Choosing a structure, go to the Secretary of State website if you want to be a DBA or an LLC or an Inc. You will make sure that your name isn't taken. There's a name search to make sure that nothing like your name is taken. And then they will confirm that you've registered and you'll pay your money. Then if you are going to get a tax ID from the IRS, which is the employer identification number, you can go straight to the IRS website. You can do it in 5 minutes. Keep that number. That is not public record, and nor can you find it anywhere unless you call them. So if you just go through the registration and you're like, oh, it's just like the Secretary of State, I can just log onto the website and find it. You can't. And calling the IRS is like days of commitment. So go to the IRS website, take a screenshot, save a PDF, give it to your best friend. I don't care. Just keep a copy. And then go to the bank and open up a bank account, because you'll need a bank account to identify you. And that's part of why you register the business. Is if someone wants to pay Shift Accounting, I have to register that name so that I can go to the bank and cash the check. The bank has to know who this is. So Kenna, for example, if you already have a bank account with an LLC name and you want to get an EIN for it, you'll get the EIN for the LLC from the IRS website. If you get redirected and it tries to sell you on someone doing this for you for a fee, get out of there. Always go to the IRS website, irs.gov. But you would go to the bank and let them know, oh, I have an EIN now. And likely they're going to have to open up a new account for you, just because the social security number and the EIN are different. Ask your banks, though, what is the cost of these things? Right? What does it cost to open another account? Are there minimum balance requirements? Credit unions generally don't have those, but you want to make sure to ask that on the front end of all of these things. Is what am I looking at here? Can I do mobile deposit? Does it cost anything? Like, ask questions you don't think you need to, but ask them. Let me just see if there's any questions in the chat. And I apologize, my dog is squeaking a toy because that's what she does every time I teach at night. Someone applied for an EIN today and attempted to submit the boy report. I completed and did not submit. Well, go ahead and submit. I'm not going to talk deeply about that because it isn't a tax thing, but I do have a slide at the end of the presentation that talks all about that boy report for LLCs and Incs, or incorporated businesses. We all have to do it. It doesn't cost anything to do it. Someone will always say, I'm happy to do it for you for a fee. You can do it yourself. And we have videos, instructional tools, etc., on that slide at the end and also on my website. Great question. I'm glad you asked. And I'm glad they directed you to it. Okay, I'm going to keep going, y'all. Okay, what taxes do Oregon-based business owners need to know about? This is just so you know, and I also wanted you to have a listing of which ones are actually personal taxes versus business, so you had a reference point. All the taxes that were on that W-2 that we saw earlier, remember I said you fill out a W-4, you're going to get a W-2, and you're going to put that on your taxes, and then we had the tax withholding. Federal income taxes, state income taxes, social security tax, Medicare tax, all of those are actually personal income taxes that you're going to have to consider when you have business income. TriMet tax, that's a talk about it later. City of Portland, Multnomah County tax, we'll also talk about that later, but I just mentioned how they want you to register when you have a business. Both of those are actually business specific taxes. Payroll tax. So if you ever hire employees yourself, which after today, you're going to be like, I don't even know if I want to be self-employed. This is so much to think about. If you feel that way, I totally get it. Every time I take a tax class, I'm like, how am I even doing this? But we need you to do it. You need to be in business for yourself. You need to have this knowledge. And once you start to understand it, it doesn't change very much. Like, tax law changes here or there, but if you can get a system that works for you, it's going to be one of the rare items that a small business owner can check off their list. Like, we're always working, but this part of your work, you can be like, I did my record keeping this week. I saved my receipt, and you're done. There's no more working on it. So payroll taxes is one day you might have employees, and that's something you have to consider for your business. And then personal property taxes. I don't file this form for folks. It's separate from your personal tax return. And it's really only for businesses that have bigger equipment. So restaurants, like silk screeners with big printing presses. The majority of my clients are service-based or really small businesses, so they don't have a lot of equipment. So maybe not needing to worry about it, but just something to think about. Someone asked, if you have a registered business name and a registered agent, where can you find out how to get paid in a way that protects your personal name? I Uh, well, if you have a business name and a registered agent, oh yeah, you might have to have your name. You know what? I would ask the Secretary of State if you have security concerns about your name being on their website, because they also are aware people have restraining orders and people have really big safety concerns, like really urgent ones. I would ask them specifically, like, is there another layer of protection? Can I hide my name entirely? For sure, because I don't want to give you the wrong advice. And I feel like that is not something that they haven't dealt with before. Great question. Thanks for bringing it up because other people might have that too. Okay, I'm going to keep going here. Self-employment tax. This is kind of like the bummer slide because it talks about self-employment tax and that it's pretty expensive. But then I'm going to talk to you about all the expenses we're going to learn how to claim so that we can have our income to go down and down and down and down and down, which really just means our taxes go down. Self-employment tax is the tax that a sole proprietor, single member LLC, and partnership owner have to pay for Medicare and Social Security. So just like on the W-2, we need to account for it when we're business owners. Employees pay it as well, but it looks a little different. So we're going to use $20,000 as an example here. So say an employee earns $20,000. So on their W-2 box 1, it'll say $20,000. Their federal and state taxes, I'm not going to guess about right now. But what I do know are the Social Security and Medicare because they're a set rate. Remember, I said up to $168,000 a year, you pay that flat rate for both. Once you make over, you stop contributing. So at $20,000, you're going to have about 7.65% of your salary taken out to send to Social Security and Medicare. And that's going to come out incrementally throughout the year through your paycheck. What you don't see is that your employer matches that for you. So when people talk about payroll taxes being expensive, this is part of payroll taxes, is that you tend to cost your employer about 12% more than your salary. And also, if you have employees ever, you want to budget for that. It's about 12% for payroll taxes on top of the people's wage salary. When you work for yourself, you actually have to pay both halves. So you're taxed as an employee and an employer, essentially, which on $20,000, unreal. That's not even income taxes. That's just Social Security and Medicare tax. So that's only if you made $20,000 after expenses are accounted for. So presumably, maybe you made $30,000. We had $10,000 of expenses that we claimed when we filed our taxes, and the IRS agrees, and they're like, "Cool, I accept it." And then you pay tax on the 20. But it's a lot, so we need to prepare, and we need to be keeping good records so that we can advocate for ourselves with expenses. My suggestion, and I have a tool for you to come up with kind of your income and expenses. It's a spreadsheet that we shared as well. If you keep track of your business income and expenses throughout the year, and say you're looking at your numbers, and at the end of the year, you see that you made about $20,000 in profit, my recommendation is to try to keep 30% of it for taxes, which sounds wild. I know. I think that's an oversave for $20,000, but look at the $3,000 alone just for Social Security and Medicare, not factoring in federal and state income taxes. So, if 30% is about $6,000, I'm guessing you're going to land between 4,500 and 5 for taxes. It's a lot. It's a lot. So again, keeping track is going to help us get ahead of this and make decisions differently and not be surprised. I'm going to keep going. Taxes for self-employed people are based on income after expenses. I just want to hit this home. So the more expenses you have, the less taxes you'll owe. Expenses sometimes are called deductions. Sometimes they're called write-offs. Sometimes, if any of you watched Schitt's Creek, there was a whole episode about write-offs, and it was very funny. And also it just talks about how ridiculous it sounds. All that it is when you make money as a self-employed person, that is just a starting negotiation. For me, when I do my taxes, if I add up all that I made in the year as a self-employed person, and I say I made $30,000 in the year, that's just the start. Then when I do my taxes, I tell the IRS, these are all of my expenses, and I put them in categories, and the forms have categories for you to use. We'll talk about that. And whatever the difference is what becomes taxable to you. And that's all self-reporting. They have no idea. All the IRS really knows It is what you get on your wage and income transcript. So at the end of the workshop, I have a slide, several slides about how to make an IRS account, like an online account with them. And when you do that, you can see account transcripts. So you can see prior year filing and adjustments made. You can see wage and income transcripts, and those will tell you what forms the IRS received about you. And Oregon has this information as well. And it's going to say W-2s and it's going to say 1099s. It's going to say any of those like official forms that we get in January and February, but that's all they know. They don't know any of the expenses. And I recently filed like 6 years of back taxes for someone who owed, the IRS said they thought they owed thousands of dollars. Oregon was just about to garnish their wages. And when I went in, I got their transcripts all downloaded and I looked at them and I was able to recreate their taxes. And what the IRS didn't know was all their expenses. They were an employee, they were also self-employed, and they had a bunch of expenses from all the years they worked. They just hadn't told anyone about them. So when we did their taxes, we reported those expenses. And then the IRS said, okay, this makes a lot more sense. And they were owed money in the end. The garnishment stopped. They were owed thousands of dollars back. But what if they had just gotten a letter that said, hey, we see you're self-employed. Do you want to talk to an advisor, an advocate? There are taxpayer advocates, but that's not what they do. Do you need to talk to someone to help you get ahead? This is the problem with this structure. And another reason why we need more social justice and social like human-centered accountants helping people navigate, because there's so much support that's needed. We have a little bit more and then we'll take a little bit of a break. What do we mean by income for the self-employed, and are there forms? So business income comes in many forms. I don't have to read them all to you, but cash and PayPal and Square payments, grants. So the RAC grant, the Regional Arts and Culture Council, gives so many grants to folks. They're taxable, crowdfunding, royalties, all taxable in exchange for sale of goods or services. Sometimes you will get a tax form. Sometimes, not always. It's the responsibility of the person who pays you to give you the tax form. Many people don't. Sometimes it's because you didn't make enough from them in the year. Sometimes it's because they just didn't do it. But whether you get the form or not, you're supposed to claim the income. But like I said before, what the IRS knows is forms. So many of us just self-report a lot. We share this information because we're like, well, I made this money and I spent this money and I have to claim it. And you run the risk if the IRS decided to audit you, they get to look at your stuff and say, you didn't claim this. Why didn't you claim this? I saw you made $1,000 here. Where's that? Right? So we are all operating under this fear of an audit, which I will say, oh my God, Francis, I swear. Hold on one second. This is what's happening right now, this penguin. I can't. We are all so scared of, no way. We are also scared of an IRS audit. But I've been doing taxes, like I said, 12 years. I do over 300 returns a year, mostly for small businesses. Have not had a client get audited yet. So it's not as common as we think that it is. So that doesn't mean I'm encouraging you to do things you're not supposed to do. I just want you to operate with like a healthy understanding of what the system actually is, and that much like many systems in the government, it operates on us not understanding it and being afraid of consequences. And because they don't teach us any different, there's no let me help you comply. It's you haven't complied, you owe us. We're garnishing your wages, the way that you live, right? So let me just see if there's any questions in here. And then in terms of the 1099 forms, I have a whole slide about 1099s, whether you have to issue them or you were the receiver of them. There's some rules that changed recently, so I'm just going to tell really briefly. The 1099 NEC is just for non-employee compensation. That's the first form I showed you. That's if you're selling your time, service as a self-employed person, that's the form you expect to get if you get paid $600 or more from a client in the year. Doesn't mean they'll give it to you, but they're supposed to. The 1099 miscellaneous, I mostly see this when you're paying or receiving rent. So if I rent a commercial space, I rent an office for my business and I pay a landlord, then I'm supposed to 1099 the landlord and say, this is how much I paid you in rent for the year. That goes on the 1099 miscellaneous form. There's a box that says rents. The 1099 miscellaneous form I also see for like therapists who bill insurance, doctors bill insurance. That's where that's what how that form will be used. In the past, there was just one 1099. They just decided to make multiples just to make everything so much easier, right? So the 1099K, that's the form that you get if you are billing through a third party payment processor. So if I use PayPal for my business and it's a business PayPal, they take fees out, all of it. Same with Venmo, same with Cash App. If I register as a business with these apps, which technically you're supposed to if you're doing business through them, they are supposed to issue my business a 1099K if they pay out to me $5,000 or more in 2024. The threshold used to be $20,000 of sales and 200 transactions. 2 years ago, they said, we're going to drop that. We're going to turn it into $600 of transactions for the year. It's like, who are you preying on here? Us not having tax revenue for services is not because of people making $600 on PayPal, right? But that's what they changed the rule to. In December of 2022, they were like, never mind, we're not doing it. That was a bad idea. We're going back to the $20,000 limit. They said they were going to start it again in 2023. December 2023, they were like, no, still not going to do it. Still not going to do it. So the rule still kept through last year for the 20,000 threshold. This year, we're keeping an eye on it. Supposedly, they're dropping it to 5,000. This very important to know. If you are doing personal things with your Venmo, it's your personal Venmo, doing rent, you're doing meals with friends, whatever, they're not supposed to give you a tax form. If you get one, go to the website I shared. There's a way to deal with it on your taxes. You should not have to claim it as income. If you're doing mutual aid, you're doing fundraising, that should not be business income. Do not put it in a business Venmo or a business PayPal. Someone wrote something in here. What amount of money do you need to make before you start worrying about being fastidious about your income and expenses? I would do it all the time. I mean, I want you to be tracking your business income and expenses, but also secretly and not so secretly, part of my push is to get you to also do that with your personal stuff. Because I want you to know what's going on because they inform one another, and I'll have clients that are struggling financially and their business seems to be, doing okay, but it's that personally when they actually look at the numbers, they're like, oh, I'm spending this money I shouldn't be, or I can't right now, or there's ways that I can save or share resources with people to like not be having this much output. So I want you to do all of it. I want you to look at your personal stuff and your business stuff. But I would start tracking $1,000. I mean, you would have to claim that on your taxes. Technically, that's income. $400 or more of business income, you're starting to pay Social Security and Medicare. So they're getting you at a very low number. The one pitch I want to make is for the individual development account. Not everyone's eligible for it. There are certain financial kind of like thresholds for being eligible for the program. It's called the IDA, the Individual Development Account. It's Oregon specific. It is offered through the Native American Youth Association and Micro Enterprise Services of Oregon, as far as I know, and I'm sure there's other providers. It's a matching grant that's tax-free. So as a business owner, you get hooked up with a business coach, you work with them for like a year, you save money for your business, and then you get it matched 3-to-1, 5-to-1. It just kind of depends on the situation. I've had clients get $5,000. I've had clients get $7,000 tax-free, and then they can use that money for their business for expenses. So it's almost like you get like a double benefit. It's incredible. I've never seen anything like it. So as long as that's being funded, if you know anyone who could benefit, suggest that they go for it and be aggressive about getting in the program. Just because someone doesn't write you back right away, keep asking. It's what I've learned with the IRS. It's the best. What I have learned to advocate in so many areas of my life because of dealing with the IRS and honestly Oregon Department of Revenue, because they're kind of worse. And if you get an answer you don't like, try again. Call someone else. Like don't, just because it's not working the way you want, try to talk to someone else and see what they can do. But the IDA is an amazing program. It's so helpful for people to get their businesses off the ground. They also have them for educational things, for debt relief, and for buying a home. It's a great program. So just wanted to pitch that. What do we mean by expenses for the self-employed? Expenses, deductions, write-offs, whatever. They lower your taxable income. That is the point for your business. I have a tiny blurb about what the IRS says a business expense is, just because it is so vague. To be deductible, a business expense must be both ordinary and necessary. What does that even mean? Every one of us is doing something wildly different. What does it mean to be ordinary and necessary? And also, how would one prove that if one were to be audited? How do I explain why such expense for my accounting business is deductible versus someone's jewelry business versus someone's plumbing business, right? Versus someone's consulting business? It's all on us to cultivate that narrative and explain why I had to spend this money on this thing. Um, a colleague of mine who's since retired, June Walker, kind of goes into a better description that I like, that helps flesh it out a little bit, that I share. But the important thing to remember also is that for every business expense, you have to be able to prove payment amount and why it's for the business. And I say you have to prove it if you're audited. So I'm not asking my clients to explain it to me, but if you have to be prepared, and that's what I tell people, is that I don't know if it's going to happen. And the way audits tend to work, just because I feel like this is information that's not shared, generally it's only going to go back 3 years. So right now, they're doing audits more aggressively around your 2021 taxes if you filed on time. So if you filed on time and you make it past April, I think 22nd of next year, and nobody's audited your 2021 return and you filed it timely, you're probably fine. You're probably not going to have anyone come back and ask questions. Then 2022 will be the next year, then 2020. The other thing is that they tend to only go back 3 years with audits, but it doesn't mean if they find something that they really don't like that they won't go back further. So just something to keep in mind. I tell people to keep receipts longer than 3 years because of that. And I'll talk about records later. But refunds also time out. So after 3 years, you can't get your refunds anymore. So I filed that person's back taxes, and for some of those years, there were refunds due. They disappeared to the ether. So if you haven't filed 2021 and you might be due a refund, do it now. Get it done before April. I think it's 22nd. I would do it by April 15th next year, just to be on the safe side, because the refunds will go away and there's no getting them back. All right, I'm going to keep going. Steps for maximizing expenses. This is honestly just a slide about mindset and like intentionality. And one of the, takeaways from today is not just that you have someone you can ask questions to and that you need to be asking these questions. You're not supposed to know this. Is that I would love for all of you, as long as it's not cost prohibitive, to set up a separate bank account to track your small business stuff. So whether you're an LLC or a DBA or not, right? So sole proprietors technically don't have to, because it's just us using our name and our social or our ITIN. But if you want to keep track of things, it's a great way to separate it out so that when you go make a purchase, you really are intentional about which card you're using, right? Is this a business transaction? Is it personal? It really helps, because as you can imagine, when you're going through your transactions, how are you going to remember this time that I went to Fred Meyer was business versus personal? You're not going to remember that. And so I think it's a really great process and like a mindset to do that for your record keeping. And the more your business grows, you're going to have to do it anyway. So just get in the habit. If your bank makes it cost prohibitive, I understand not. There's other things we can do, but it's just a suggestion. I'm going to say defining your business broadly. So, I do taxes and bookkeeping and consulting and teaching. And so I just put that all under Shift Accounting, LLC. I don't want to have a separate thing for every little thing that I do. If I wanted to advertise with like a different name for like my educational stuff, I actually can register a DBA under the umbrella of Shift Accounting LLC. So Shift Accounting LLC could be like the main, like the mother, and then I can have little side things underneath it, but we all file taxes together. So a lot of businesses in town, the names you see on their signs are not their registered name when you look on the Secretary of State as the mother, essentially. So that's an option for you. I work with a friend who does zines sometimes, video production, sometimes they tour with their band, and we just call them a multimedia artist. So they can just keep track of everything in one bank account, all the income, all the expenses, and we file taxes. It's that one Schedule C form, and it's pretty easy, saves them time, which for me, saving your time is our most valuable resource. Part of why I do this is to help you save time, because my clients that spend 12 hours suffering at the end of the year trying to add up all their stuff that they didn't do during the year, I don't want that for them. Because if you do it throughout, it's going to be easier. I want to see if there's any questions in the chat. Single member LLC and keep 2 accounts. Is that okay to do too? I'm not sure why you would have 2 accounts. Is it two accounts for the LLC, or you have a personal account and the LLC account? You can just put it in the chat. Work life versus personal life, all that's meant to be is to just bring to your mind that when you're a small business owner, lots of times there's a lot of crossover, and kind of figuring out what's business forward versus personal can be gray. And I just want you to not forget that just because, for example, Tara and I are friends, and Tara is helping me work on my workshop and develop it, but we just wanted to have a date. So we went out, we were talking about the workshop and like I could call that we got together to talk about the business, and like Tara's actually helping me facilitate this workshop, and I have proof that I'm doing it, and I could explain it in an audit. Sure, why not have a meal expense for that? So it doesn't mean every time every person you ever see you ever mention your business to would be a justifiable expense in an audit. It just means to open up your mind to the way that you interact, and is there a potential, if you're eating, is there a business expense here? Are you paying rent somewhere? Could we have a home office? It's not about you buying more stuff you don't need. It's about the things we already pay for, and are those related to our business? I'm just going to go to the chat because I saw it scrolling. Personal account and business, that's great. A single member LLC should have its own business account, and you should have a personal one. So you're doing great. Similar question, single member LLC and have business and personal, but still use my personal account for things. Is that a big deal as long as I can document it? It's not a huge deal as long as you can document it, but part of the LLC being protecting you and having that liability protection is keeping things separate. So what I would say is if you use your personal account for business stuff, maybe reimburse yourself. So that's what I do. So if I end up using cash, maybe I go to the coffee shop with a client and I use cash, I'll, write down or keep the receipt or whatever, and then I will transfer the money from my Shift accounting business account to my personal and put it in the memo, coffee meeting at such and such, met with client. And so in the business account, it will see the transaction. It will see that money come out, and it will keep it very separate. Someone just said, God, the chat is not scrolling up for me. I have to go to it every time. And so it makes me do extra work, which I don't love. Hold on. Is it okay to take pictures of receipts? Of course, yes. Pictures are great, scans, anything, whatever works for you. In your email folder, I have receipts with subfolders that say 2021 tax year, 2022, 2023. So I dump them in there. Any system that works for you is great. Great question, and we'll talk about that later. I think this slide, and then we have a break. We'll do maybe we'll see what time I'm finished with this. There's still a lot more to go through, so I want you to get as much as we can. And just let you know, it's not going to be a long break. Types of expenses. So on the Schedule C form, so we talked about the personal 1040 is what we all file for personal taxes. And then if we're a sole prop DBA, or single member LLC, we file a Schedule C. And on that Schedule C, we report our business income and our business expenses broken out by categories. It's one page. Like a third of the page are the expense categories. So physically, there's not a lot of categories there. And we're supposed to plug in all of our varieties of business expenses into those categories. They're limited. So I'm going to share some of the basic ones that are really obvious. And then we're going to spend a little extra time going over ones that may be a little bit confusing and nuanced. Advertising. It's pretty obvious what it is. I'm not going to read this to you because you can read it to you. I want to save the time. Commissions and fees. I tend to put bank charges, ATM fees, credit card fees, PayPal and Square fees in there. So if I get paid from a client $100 through PayPal and I only get $97, I claim that $3 expense. That's a business expense. I had to pay that money to get my money, which is ridiculous, but that's what it is. So those are things we want to keep track of. Sometimes artists will use that commissions categories for paying commission to somebody, or a writer might do it to their publisher. That's just generally, I see what people plug into commissions and fees. Contract labor. So when you pay someone else to help you as a contractor, so I hire one of you to help me work on my website. I give you a W-9 form. I have you fill it out. I take it back. I say, if I pay you $600 or more in the year, I'm supposed to give you a 1099. That's contract labor. Insurance, business insurance, malpractice, et cetera, workers' comp, legal and professional services. So that's also pretty self-explanatory. Sometimes for someone who's like a therapist, I would put your therapy in there. I would put your supervision in there, because part of being a therapist is also getting that for you. An acupuncturist, getting acupuncture. You need to go through that process as part of being a provider. So I think those are legitimate services. Office expenses, rent. This is talking about studio space. This is talking about practice space. This is talking about a brick and mortar, a food truck rental space or whatever. This isn't talking about your home office. We're going to talk about the home office separately. Supplies, so just general consumables. It's going to change for everyone's business. Maybe you're a jewelry maker. Maybe it's your pliers. That could be just a supply. Taxes and licenses, registering your business, the TriMet and city taxes. I don't mention your federal and state income taxes, because remember I said those are personal taxes, and that's why that chart lays that out for you. Utilities, so ones that I add here would be like cell phone and internet. So if you have one cell phone, which if you have one, you usually just have one. Therapists sometimes have two. But if you just have one phone and you're using it for business and personal reasons, maybe a percentage of that bill. And there's no like standard amount. There's no like, what are people allowed to use? That's not how this works. It is what is reasonable that you could argue should you be audited. I would not say 100% if it's mixed use. In the past, for telephones, it was landlines. And the only way you could expense your landline is if you had a separate one. So that's the way that used to work back in the day. But now that we all have so much more communication and access, but also these things are so expensive, I think it's totally reasonable to say a portion of that bill. And maybe it grows over time as your business grows. Same thing with internet, personal internet. Additional expense types. There's usually a line on that Schedule C form. So if you do your taxes on paper, or if you do it through software, there's usually like other expenses. I would add categories. I would add subscriptions if you have them. I would add education. Why these aren't categories, I don't know, especially subscriptions. The form hasn't changed in years. But I usually add categories. I would not use miscellaneous or uncategorized or other to describe an expense on your Schedule C form, just because it leaves too much question. I would stick with the categories available and maybe add some. And I think that we might have break. Yeah. All right. I promised a hard start at 7:15, and I'm going to deliver. Here we go. I always start with my least favorite slide too. Yeah. Sell products that I'd like an inventory control system. Talking about inventory is my least favorite thing. But is the next slide. Someone just asked that tracks cost of goods and how much I sell each item for. Yeah, I would never recommend doing that through QuickBooks. I don't have a recommendation because I don't have any clients that are tracking inventory right now, but you could email me and I can ask my bookkeeping friends, because I do feel like we know somebody. So feel free to reach out. Okay, we're going to get started. We're going to talk about some of the stickier expenses that just are hard to discern what's what. And we're going to start with cost of goods and supplies and the difference between those two things. Cost of goods and supplies. Well, supplies are things that we use to make what we're making or for services we're providing, whatever. So in this case, if it is a food truck and they're prepping food, the ramekins, the scissors, the fork, the knife, the spoon, the cutting board, those would all be supplies expenses. We're not selling these things. We're not selling knives as a knife business. We are just using that as a tool to make these other things that we sell. The cost of goods sold expenses are the things that we're actually selling to our customer. So if we're a food-based business, it's the raw ingredients Whether they're fully formed into the burger or not, it's all just comprised of raw ingredients. So it's the value of those at cost. It's the packaging that everything is in that we sell to our customer. It's the to-go utensils. It's the beverages. If we're a coffee shop, it's the coffee beans. It's the cups. It's the warmer. It's the condiments for the coffee, etc. All of those things are physically leaving us. And there's a tax reason and then just like a profit margin tracking reason to track those things separately. So this is going to be a slide with a bunch of numbers. I try to do this very little. What I will say is if your business doesn't sell stuff, this won't apply to you. So for me, it doesn't apply to my business. So I wouldn't say it's my forte, but I like to talk about it with folks because I do think it's meaningful. And I have had situations where it's really helped people to have this information tracked. So we're going to talk about calculating inventory and cost of goods. And if this doesn't apply to you, check out for a slide and we'll check back in a minute. We're going to do an example of a business that just started this year in 2024. And we're going to say it's a food truck business. And so the first thing that you'll see is what is the value of the inventory on January 1st if it's your first year in business. And we would say it's $0. That's what we always say when we do your taxes. And then throughout the year, you buy ingredients or raw materials. So in this case, you'll buy buns and you'll buy whatever you need to make the burger and the lettuce, and you'll buy seasonings, right? You'll buy condiments. And you'll also buy beverages for resale because you're also selling drinks. And then you'll also have packaging because you're packaging the beverage and you're packaging the food and the to-go utensils and the napkins, all the things that are leaving the food cart and being sold to your customer. And at the end of the year, we look around the cart and maybe we also have like a little storage space and we add up the value of what's left. And that's at the cost to us. So we might have like a bag of buns and we might have a sleeve of cups, and then we might have some utensils and we might have some stuff in the freezer, and we add up the value at what we bought it, not what we're going to sell it for when it's complete. And say we have $1,000 of stuff left. And a lot of this, like my warning about this doesn't really apply to most makers because everybody sells out in December. Food businesses oftentimes can't hold a lot of inventory because it's perishable. But this will apply in certain situations, so that's why I'm sharing it. So let's calculate our cost of goods sold expense. First, you're going to add the starting inventory to all of the purchases made in the year. So we started with 0. We add all of the ingredients and the beverages and the packaging, and we get a total number. Then you're going to take the ending inventory that we valued at $1,000, subtract it from this number up here, this 2,700, and whatever the difference is what's sold. And so according to IRS rules, you're allowed to expense what's sold. What hasn't sold, that's still on the floor, that is extra and left over, is actually considered like income. Because the IRS, it has a cash value. It makes sense in the context of like a car dealership, because think about December and how many people are trying to like offload inventory. Everyone's trying to have a big sale in December to get rid of stuff. Part of that is getting rid of dead inventory. So there's a strategy there for these businesses. Most of us are never going to have a business like a car dealership. So this is like way more complex than we have to worry about, but all of us do need to think about this. I've worked with bag makers before who maybe started growing their business, and it was really important that they knew for each of their designs, like what is the cost and what am I selling it for and how much hardware am I using? They might get into the minutia of what is the actual physical cost of this bag and am I selling it for enough margin? The takeaway here is if you have more inventory at the end of the year than at the beginning of the year, you might have to pay taxes on that difference. Simply put, I've like always looked for a sentence that would explain that. And that's my point. I had a bike shop one time that was a client that I inherited, and they had started their business in the fall of the year, right? So bike shops are not doing great business right now. It's just in Oregon, it's raining. People are not thinking about bike transportation right now. So when they started their business, for argument's sake, in 2023, they bought stuff, but they didn't have much inventory on hand, right? They didn't have a lot of cost of goods. They started their second year with a very low cost of goods amount left over from the year before. They bought a lot of stuff in year 2, and they ended up sitting on a lot more inventory at the end of year 2 than they started with. And they had like a substantial tax bill because they had all these bikes, and those bikes have value. And that was a shock for them because they didn't understand the impact. So I just wanted to share that as like an anecdote, not to scare you. majority of my clients just say that everything's sold at the end of the year and they call it good. Like they don't really go into the detail. I have clients that are risograph printers and their materials are paper. So there's not a big value there. So you're not going to be rattled with a lot of inventory costs that are going to hurt you tax wise. But I just want it to be like this kernel in the back of your mind that that's something you might want to consider, especially if a business scales up. And it looks like I just want to see if there's any other messages. Oh, I'm not presenting? Ah, I'm so sorry, you guys. It says that it's sharing. Tara, what do you think I do? It says stop. I could hit stop sharing and try again. Oh, people say they see it. Okay, we're good. Woof. I was like, I'm fired. The library will never have me again. Okay, moving on. Let me just make sure that there's no messages because I just got lost because I was, whoa, too soon. We're talking about meals after. Let me just see if there's any more chats. Everyone's here. We see it. Wonderful. Okay. Okay, equipment. So this is where I differentiate between supplies and equipment. These are all tax categories, and there's all subtle differences to all of them. Again, this may never apply to you because maybe you don't buy really expensive things for your business. You know, for my business, we don't pretty much have any equipment. Our computers cost less than $1,000. Like we don't, our software we buy, but that's not considered equipment. So we don't really have anything that falls in line with this, but a food cart would. Buying the cart, buying a stove, buying the mixer, whether new or used, if it costs you a certain amount of money, we might want to track it a little bit differently. And so the IRS will allow you, there's this thing called de minimis election, where they will let you expense an item that costs $2,500 or less in the year you purchased it. So if you bought this mixer and you got it for $2,400, they would allow you using this election to like put it in your supplies. The thing is that a lot of businesses that doesn't work for them strategically. When you start a business and you have to buy a lot of stuff to get the business off the ground and you're not really making any money, it might behoove you, instead of saying I had $20,000 of expense of equipment I bought to start this business, I'm going to expense all of it. It might make sense to spread that $20,000 out over some years. That's what this is. It's really a strategy. It's really a way to do tax planning. The process is called depreciation. And it just really means that we're going to take this $20,000 worth of food cart and stove and mixer and take that expense and extend it out over, 5 to 7 years, depending on the type of asset, type of equipment. The IRS has like buckets, 5-year equipment and 7-year equipment. And those are the most common ones I see clients use. Computers and things tend to be a 5-year life. So if you bought a $3,000 computer, you could expense it over a 5-year period, a portion of it each year until you did the full 3, or you could do it the first year potentially, depending on the situation. And then things like equipment would be more like 7 years. You don't have to memorize this. Once you're doing your taxes on software, they will guide you through these questions. This might never apply to you, and maybe you buy things that are less expensive than $2,500 or less, and you just call it supplies or something. But there is tax strategy here. So for example, I work with a silk screener who on loan got a $60,000 printing press. And in the year where they got it, of course, that would be amazing for their business. Their business is already running to have a $60,000 write-off, because there's a way to do it with a special kind of maneuvering in your taxes to expense the whole thing. And instead, we chose a more conservative path of doing it over 7 years. So they get to enjoy that expense over 7 years' time as they're making money from that press. And it's really worked out well for them as the years go on. This is where you might ask for tax help, because this is strategy. And this is something that you might want some direction with. I wouldn't expect anyone to understand this right off the bat. I don't. I didn't. I'm still learning. So One other thing is that if you have equipment that you've already purchased in the past, but you've never put it into business use, and now you're a business and you're a business using this computer and you're a business using this camera and you're a business now using these power tools, there might be a way to account for that. So I would make a list of those items and what the resale value is, like the Craigslist value. And that is something that might apply to your taxes. I'm just going to see if there's any messages. Is $1,000 the cutoff? The $1,000, I ask my clients to separate out items that cost $1,000 or more and call them equipment when they're categorizing things and tracking things in their books or their record keeping, because it gives me the ability to find those things easily and work on strategy with them. So I have them do it at a lower level because of my clients, and I'm a tax person and I know what I'm looking for. I just wanted you to know you have the option to like put them as supplies at that point, but you don't have to. So I'm showing you the rule, but then the kind of nuance of like how I do it. I think it's a good idea to separate them at that point for sure. Um, Meals. So I'm going to talk about local meals and then I'm going to talk about travel meals. So meals, you can't be alone. So if I go, because I decide to leave my house because I work from home and I decide to like go eat lunch somewhere by myself and work, that's not a business meal technically. I would have to be in a meeting with a client, with a colleague, with someone who's helping me with my business, some arguable way that this is a business transaction. I can't be alone. It has to be for business purpose. And I should keep some kind of receipt, whether it be paper or digital. This would include groceries. So like if I was buying groceries or something and made food for a colleague, then I would put that in my meals expense as well. What happens with meals though is it's a little bit different. So we add up the total cost of your meals for the year. When we go to your taxes, you add up all of your expense categories and the total amount spent. Whatever you do for meals, you actually have to cut it in half when we do your taxes. So if you spent $500 on meals in the year for business purposes, when you do your taxes, the actual expense you get to take or the actual way you get to lower your income is $250. So instead of taking the full $500 expense, we only do $250. Your software will do this for you. Your tax person will do it for you. But I just want you to understand the difference. And the one way kind of around this that I think is reasonable, and like the IRS has said this as well, is if you're having a public event and you offer things for free. So if you have a gallery opening or you open up your space to the public for like an open house and you have snacks and drinks and things like that available, I would call that supplies. Supplies are 100% deductible expense, and that's totally reasonable. It's a public event. There's no service fee involved or tips or anything. It's literally just buying things to have on hand to give away as part of an event for your business. So if a client has an office and they have, I do work with several therapists, and if they have tea or snacks around just in case for a client, I think that would be a reasonable like office expense. I'm going to see if there's any messages. Could my business buy my computer from me at the resale value? That doesn't really make sense. You would just say what the resale value is and put it on your taxes as an equipment purchase or as a supply. So there's a variety of ways to get it on your taxes. It could be, yeah, generally it would just be an equipment expense, but no, your business wouldn't buy it from you. That like starts a whole nother level of things that you would have to deal with. This would keep it very simple. And this is the way people do it. But I appreciate the thought. Networking. So when it comes to networking, eating food with people is not considered networking, aka advertising. That's not an advertising expense. Advertising is pamphlets, websites, things like that, business cards. But us having food together, and I'm your accountant, that would not be considered an advertising expense. It should be subject to that 50% deduction. It should be a meal. If I spend an entire day making deliveries around town, I got to eat. It's true, but you could also just eat food that you have. You know what I mean? Like you're supposed to be with somebody else. That's the rule. And it says that actually clearly in there. So the thing is though, how does anybody know if you're by yourself or not? So you want to keep good records of who you were with, why you were with them, and how this is for business. But you would, if you got audited, you would not be able to argue, I was doing deliveries and I picked up a bagel. that wouldn't fly in an audit. But you went to the bagel shop, who is also one of your clients who you do deliveries with, and then you had a snack with them. I think that's reasonable. Um, okay. Travel. So with travel, we're going to talk about business forward travel. So you are going to a convention for work. You're going to West Coast Craft. You're going to do a gallery opening in New York for your art. You need to go there physically. You need to leave. This is an overnight. All the expenses should be a deduction: airfare, lodging, rental car, all the transportation, convention fees if you have them, and meals. And when you travel for work, all of your meals are a business expense. You don't have to be with somebody else because of the nature of the trip being business forward. All of your food should be deductible with that 50% limit. You do have an option with food when you travel, though, and this is why I have people track local and travel separately when I can, or at least keep a calendar of where they went so we could figure it out. Um, you're allowed to opt for the per diem or per day rate for meals expenses that the IRS sets every year. So every year, the IRS, on this website that I share, you can look on it and you can see different this one is for the US. So you'll see different states and then cities, and then it'll say what is the meals rate for the day, not lodging, just the meals. And it generally is like $52 to $79 a day, depending on where. Like if the place you went doesn't show up anywhere, then you would just opt for the lowest rate of 50 something dollars a day. The highest would be, I think, 79. It could be even higher this year. I haven't looked at 2024 per diem rates. I don't look until I do people's taxes. But you have the option to pick the one that suits you. So, for example, if you go to Seattle for 5 days for work, for your self-employment work, and you spend $200 on food, but you're allowed to spend $79 a day on food, which is significantly more than $200 for the whole thing, you can opt for the per diem rate. You still need to keep track of what you spent. You still need to be able to prove that you went there if you're audited, but you can opt for that per diem rate. And this does help with people on residencies, people who tour and travel a lot. This can be a great expense for them. They still have to do that 50% deduction, but it can be really helpful. And it's just knowledge for you to be aware of. And there's also a foreign per diem schedule as well. And I was going to see if there's any other questions. And then I'm not going to talk about the mixed business and travel. I'm going to leave it for you all to read yourselves. That's like a tough one because it's kind of hard to understand, what is reasonable when it comes to, I'm going to New York to see family and I'm going to see one client while I'm there. Did I need to be there for a whole week? Would that be justifiable in an audit? How would I prove that I had to be there as long as I was? So, sometimes if you're there if more than 75% of the time or more than 50% of the time you're there for business, then we could do like an apportionment of your travel expenses. So I'm going to leave that for you to read. My colleague wrote those distinctions up and I think they're pretty helpful. Someone asked if you're a single proprietor. Yeah, sole proprietor is... If you're a sole proprietor, is the goal of deductions to exceed the standard deduction? If your deductions don't exceed the standard deduction, is it still worth submitting deductions? So the standard deduction is actually nothing to do with being self-employed. So without getting into like quicksand with tax law, every one of us who files a personal income tax, regardless of your self-employment stuff, we get to reduce our taxable earnings by either a standard deduction or the itemized deduction. The standard deduction is just a flat rate set every year. It increases with inflation. That might say this year, the first $13,000 that everyone makes as single people, we don't pay income taxes on. That's the filing threshold. Every dollar above that 13,000 is taxable. That is completely separate than your business income and expenses. That has nothing to do with it. There is no standard for business income and expenses. It's only what we share. That's that. They're completely different things. Standard and itemized deductions are on the just income tax side of our tax return. This has to do with business income and expenses, which is like a completely different part of the tax return. Itemized deductions, when those come into play, are generally for people who own homes and have a mortgage. And what it says is if your mortgage interest and your property taxes and some other things add up to more than the standard deduction. So if the standard for single people, for argument's sake, is $13,000, the first $13,000 you make is not taxable income wise. You're still paying Social Security and Medicare. You're not getting out of that. But income wise, if your mortgage interest and property taxes and donations, et cetera, are more than 13,000, you get a higher deduction to your taxable income. Like, what the heck are you talking about? This is just this tax stuff. This is where we go, right? But there is no standard for being a business. Um, it's always good to claim the expenses and keep track of them for sure. So studio and office. We talked about renting and just being mindful of time at 7:37. We should get you done exactly at 8. I'm just going to have to keep talking and talk fast. When you rent a space outside of your home, all of those expenses are business expenses: the rent, utilities, repairs, cleaning, decor, insurance. This could be you rent a table in a tattoo studio, you rent a chair in a salon, you rent an artist studio, a band practice space, a brick and mortar space, an active space. All of that would be deductible if it's for your business. And, or either, you could also have a home office. And I use an example of a studio apartment to show that how we would calculate a home office if we didn't have a separate room with a door. Because typically, if you were to read the IRS publications, they're pretty intense about, in order to be a home office, it has to be a separate room where you live with a door that closes, that is like basically self-contained office, that it can never be for anything else. But again, who wrote tax code? People who could afford to have a separate room. There's people that do not have a door where they live. There's people that have just a door to the bathroom. There's people that share space, but they're still doing work for their business in their space that they're paying rent for. So how do we make this tax code work for the majority of us? So this studio apartment in New York, the way that I would calculate this, because home offices are based on square footage. So if you're working from home a lot for your business, there's 24 hours in the day. You might go to your studio so many hours, but you're doing a lot of admin at home. Maybe you're drawing at home. You're talking to clients at home. You're doing scheduling at home. If this was a 400 square foot studio apartment and 40 square feet of it is where your desk was and your chair, and maybe you have a closet with all your storage for work, that's 10% of your space. So 10% of your rent, 10% of your utilities, et cetera, could be a business expense. There's an option also to do this $5 a square foot thing where you just say how many square feet are for business, and you would do $5 per square foot up to a certain amount. In this example, though, that would be $200 deduction. I would guess you would get a better deduction if you actually did the math and did the full form. When you go on TaxSlayer or TaxAct and you do your taxes online, you could say, I have a home office, and then it will guide you through those questions and answers. You don't have to remember how to do all of this. It will help you get there. The only time you have to remember is if you're doing it on paper. And if you're doing it on paper, you're a better tax person than I am. So more power. Auto expenses. So this is another thing to talk about. There's 2 ways to do this as well. The one I'm going to tell you about, the method I'm telling you about, is the one that I do 90+% of the time with my clients. I have very few clients who use the actual expense method. I did make a slide about it. It's in the glossary for you to look over. This method's common, it's easier to calculate, and it really works out better for people who have mixed use vehicles. If you own a vehicle, so this is not talking to you, to your experience if you don't own a vehicle, whether collectively or not. If you don't own a vehicle and you borrow, rent, use Lyft, use TriMet, etc., local travel or travel expenses for business. I'm just talking if you own a vehicle, we're going to start keeping track of things like miles. And I have it written out for you what to keep track of, how to keep track of it. There's apps that do it. You could also just write it down. I have UpNote, which is a note-taking app that I really like. It costs $30 for life. It really works well syncing between phone and computer. And I just keep a list of the date and where I went for work. And then when I'm really bored, I'll put it onto a spreadsheet and put the miles in from my home office to the work meeting and home, from my home office to the post office to send something for a client and home. There's a mileage rate set every year. This year it's 67 cents a mile for business. So that adds up. So this is one I think that gets overlooked a lot by clients or by folks filing their taxes, but it's a great expense. And why pay tax on that money if you can use it to reduce your taxable income? If you have $200 worth of mileage deductions, that's $200 worth of money you don't have to pay tax on. So why are you working so hard to make money for your business and then just giving it away kind of thing? So I'm not going to go too deep into it because we don't have a ton of time, but we're going to talk about record keeping. Business bank account, I mentioned this over and over and over again. This could also just be a separate personal account if you are a sole proprietor and you haven't registered a name. This is one of the best and easiest ways to track your business income and expenses. The more you separate business and personal, the easier it is for you to understand your numbers. Also, if you have that separate account and you're good at using it, it'll make using software that much easier because the software tends to directly connect to the bank account. And if it's all mixed up with business and personal, you're going to spend all this time sifting through things you don't need to sift through. Having a calendar, great. I mean, I needed to keep track of everything, but also it's backup proof of where you went, why you went there, potentially for calculating miles. It could help you figure out, oh yeah, I drove to this place for a meeting with a client. I should add those miles to my deductions. Software and apps, I have a spreadsheet that we shared with you. I'm going to show you that in a second. Mile IQ app is $5 a month. It will help every time you get in the car. Is that business, is it personal if it's your vehicle? And then it'll make a spreadsheet for you at the end of the year to show you all the business miles for the year. So if it's worth it to you to spend that money to save that time and to get those expenses, go for it. Wave app is, someone had mentioned that earlier. I really like Wave app. It's lower cost than QuickBooks. It's a bookkeeping software. You can use it for a variety of reasons, but it's an option to QuickBooks. QuickBooks is really functional. It's a bit more expensive. Intuit is a really terrible company for so many reasons, but these are the tools that we have right now. I'm hoping that over time there will be someone in my field who makes software for us, by us. Like I would really like to see that happen because none of these companies really center the people who are doing the work. We're the ones who sign up clients. We're the ones who are out there advocating. We're the ones using these tools and teaching people how to use them. And oftentimes the companies are not asking us our opinion on them. So one of these days, someone's going to do something and it'll be great and I'll share the resource. But paper is fine too. So if you're like, I'm just going to always use paper, go for it. There was a time where we used an abacus to track our money in and money out. We didn't have computer and technology in this way. And if that speaks to you, then whatever works for you works. Keeping your receipts, someone mentioned, can we do digital? Absolutely. Keep an email folder. I ask people to keep them for 7 years, which might sound wild. That's just because I'm overly conservative because I worry that I'm going to give someone advice about keeping it for 3 years. And then maybe they are in that awful situation where they have to go back longer. And I said that they could get rid of them and then I'd feel terrible. So I'm kind of just like doing this for my own self. Keep them for 7 years. I do it with my business too. And then you can just burn them, shred them, whatever you got to do. This is the spreadsheet that you're getting. I know it looks wild when you look at it at first glance, just like this entire workshop is wild at first glance, and then eventually it'll start sinking in. Every single one of the sheets looks like this. So every one of them represents a month of the year, and there's equations built in to do the math for you. So the first column is the date of the transaction you would enter. So if you're just going to do data entry to like enter each transaction for your business, this is where you would do it. It's free. You could do one for every year. The description of the transaction you would put here. If it's income, it goes in the green column. And if it's an expense, it goes in the blue columns. And many of these things are things we talked about today, these expense categories. And what it does is as you fill it out and populate each month of the year, it's going to create a profit and loss statement for every month of the year and then annually. So if you enter your income and expenses in each of these sheets, it is built into it to have equations that will do a January profit and loss, a February profit and loss, etc. And then you can do one that will total it up for the whole year. And that's what you would use to do your taxes. That's what you would use to guesstimate how much you might owe on taxes and to prepare throughout the year. Because this is the number that is taxed, not the number up here. So after we do your taxes and we claim all these expenses, we pay tax on what's left over. Um, this is just a listing of your income and expense categories. For the short term, it's going to help you with profit margins. It's going to tell you when you're having a slow time. So if you generally are, your business is slow in August, maybe that's when you take vacation. Maybe it's when you give people time off. Maybe that's when you work on admin, right? You just focus on the admin of the business because it's not bringing in a lot of profit. Maybe you switch it up in August and do something different with your business to try to get more business. This is going to give you that information about these trends. You might intuitively know them, but it's nice to actually see them. In 2020, what we found was when small businesses or self-employed people tried to get unemployment and tried to get paycheck protection program and all these programs, they needed this data to get that. My clients who are self-employed who try to get a house, they need this information. So it's going to be helpful for a variety of things, not just for taxes. The tax part is not as important to me as you just knowing this information and having it available. This is what the Schedule C looks like. This is the tax form. So remember I said the personal 1040 is the personal tax return that we all file, and then we add all these forms onto it depending on our situation. This is where sole prop DBA, and single member LLCs claim their income and their expenses. And it all goes on this form, and all these arrows will kind of give you a tour of where things are. I just don't have time to go over the details. And you could see how this would populate, right? You could see how you would make this profit and loss and say this was the annual profit and loss, and you could see how it goes directly into this form. You just plug in the numbers for the categories. The software will help you do it, but you have it all at your fingertips. The last things I just want to mention, filing taxes and paying taxes. These are not the same thing. Filing taxes, that's an annual event. Generally we file personal 1040 by April. So 2024 taxes are due April 15th, 2025. You are supposed to be paying throughout the year. It's a pay-as-you-earn system. That's what I mentioned earlier. So the payment is supposed to be due at the latest April 15th, 2025. When you're self-employed, you're supposed to be paying it throughout the year, and that's called quarterly taxes, which is what the next slide is. One of the takeaways I want you to have from this, there's two things. One of them is if you need more time to file your taxes, if you're like, I don't have my records together, I need an extra 6 months, you can get an extension and you can file in October with no filing penalty, but you still owe the money by April. So penalties for late payment on your taxes start to accrue after April 15th. If you do not file and you do not pay what you owe and you're late, you could owe as much as 100% of what you owe in penalties. So if you owe $600 in taxes to the IRS and you just don't file, and you don't file for years, and you owed $600 to start, you could owe an additional $600 just in penalties. It's that combination of not filing and not paying that increases your penalty rate exponentially. So what I stress to you is if you need to file and you cannot pay what you owe, I still recommend filing and just setting up a payment plan so that you don't get caught up in that awful, huge increase in penalty. Because I do have people ask me that. I can't pay what I owe. I don't want to file. Well, that will not help you. It's just going to make it worse when it comes down to it. So file and get on a payment plan. It's not as bad as credit cards. It's not a predatory rate. It's not adjustable. It's very consistent. So you can make a payment plan. And I think that if you can pay it off within 6 months, if I remember correctly, it's even more generous. Like I think that they try to reduce some of the penalties for you. Someone asked, can you not do quarterly payments? Of course. Yeah, if you don't earn any self-employment income or you spend more than you're earning, you don't owe any quarterlies. So quarterlies, you just led me right to it. Quarterly taxes, when you are an employee and you get a W-2, you're paying quarterly taxes. Your employer takes tax out of every check and they pay it for you on your behalf. So as you're earning money, they're sending it out. And then when you file, you get it back or you owe. When you work for yourself, you could do both, right? You could be an employee and you could be self-employed at the same time. But if you're self-employed, you're earning money in real time and no taxes are coming out of it. So you're supposed to be saving and preparing for those payments. Whether you choose to pay them or not is up to you. But the expectation from the IRS in Oregon is as soon as you owe them $1,000, So once your debt to the IRS gets to $1,000, they want you paying that on a quarterly basis. So essentially $250 by April 15th, $250 by June, $250 by September, $250 by January of the following year. Then you will not be penalized for underpaying throughout the year. That's it. It just like you pay a little bit extra if you wait and do it all in one lump sum. It's still not as much though as if you owe on a credit card. So if you're in that position where you're going to owe some thousands of dollars, I have many clients that never pay quarterly taxes, quote unquote, estimated tax payments. They never do. They know they're going to owe every year and they don't pay them and they just eat it. And they might pay a little bit extra because they didn't pay it during the year. But for them, it's worth it. For them, it's worth it to have the money on hand. For all of us who went through 2020 and 2021 as business owners and didn't know when the next amount of money was coming, you needed to hold on to it. So I would never tell you like, pay your taxes, don't pay your rent. Pay your rent. Make sure your bills are paid. Make sure all the basics are taken care of. You can always get on a payment plan. Many people do. The schedule for payments is here and how to pay. I recommend paying online. Um, Let me see if there's any questions, but also it's 7:52, so I just going to be mindful of getting this done. Someone said last year my W-4 was not right and not enough was withheld and I had to pay a fee. Yes, it's a total bummer when that happens. So what they're saying is they filled out their W-4 when they started their employee job and it just wasn't enough to cover what they owed in taxes, so they had to then pay. That happens. I can't go into your personal situation right now because we have 7 minutes left, but you could change your W-4. You could save some money to cover the tax for next year. You could always make a new W-4 and have different withholdings. But that happens a lot. And when the Tax Cuts and Jobs Act happened in 2018, and the IRS and the federal government just changed our withholdings without our consent, which I still feel like should be this massive lawsuit. They just changed our withholdings without us knowing. So many people who usually got refunds didn't. And it was incredibly upsetting and people were not prepared for it. It's just about being able to read that check and preparing throughout the year. And one of the things that I do with my clients is I have them give me their year-to-date pay stub. I have them give me their year-to-date information and I almost like do like a fake tax return for them to be like, oh, your withholdings are way off, or you're good, or maybe you should have less taken out. So there's ways to not have this be a surprise, but oftentimes it takes having someone help you. Another reason why this system is problematic. You shouldn't need to pay someone to help you do this. You should be able to have access to resources to help you navigate this on your own. But this is just the way that it is, but you can ask me, and if I can help or direct you, I will. Small taxes for Portland small business. We are so close to being done and we have 6 minutes. TriMet tax, City of Portland tax. These are both local taxes for us who have businesses in this TriMet district. The zip code thing will tell you if you're in there. Same for City of Portland, Multnomah County tax. TriMet tax is based on your business income after expenses, just like your federal taxes are. And then it's just this weird decimal point number. So if you make $10,000 in profit from your business, you probably will owe around $73. It's a business expense to you. It's a business tax. City of Portland tax, Multnomah County, until you make $50,000 before expenses. So that's gross. That's at the top of the profit and loss. You don't owe them. They want you to file and just say, I'm exempt. I don't owe you. I'm exempt. I don't owe you. But until you make $50,000, you do not owe. At $50,000, you're going to owe at least $100. Once you get to $100,000 of income before expenses, you're going to owe them at least $200. They are notorious for sending the nastiest letters. They send these letters that say you owe a presumptive tax. They love that word. I think it's super problematic. I have complained. They do not care. It leads me to the point to say, what happens when you get a letter about your taxes? Do not hide it. Do not rip it up. Do not send the money immediately unless you know for sure it's right. Open it, read it, call the number, ask for help, look up on Reddit what the organization is. Because if it's not the IRS or Oregon Department of Revenue, once you register a business, you're going to start getting letters of people wanting to help you with all these things that you need help with. Like renewing your business registration. You do not need help with that. You do not need to pay some agency to do that, but they make it sound like you have to. So look things up, ask questions. I've had several clients get letters that were wrong because a form was filed incorrectly or because something was just reported off, right? Once we informed the IRS or Oregon, we were able to correct it. Sometimes the client got back money, sometimes they owed, but it doesn't mean that it's always right just because you get a letter. All of us get triggered by these letters. Open them and deal with them. They will not just go away. Let me just see if any questions have come up. Last year, you mentioned record keeping to back up our deductions. I'm diligent in keeping a handwritten sketchbook journal that tracks every meeting I have with dates. That will help, but also receipts, because we actually need to know what was spent. So the bank statements help, but they're not everything. So you having that calendar and that journal, yes, I think that would be really helpful in an audit, that you could show that you're like, this is my system. I explain everything. Receipts will help too, especially for things like meals. Receipts, especially for things that, like, if you're I'm in an accounting business, me buying accounting software and office supplies, if I got audited, they're not going to care about that. They're going to want to know about my travel. They're going to want to know about my meals. They're going to want to know about things that are like, why is this business versus personal? And can you show me why? So I think that journal will be very helpful, but in addition to your receipts, if you were to be audited. These are all the free and low-cost resources for small business owners I could come up with. Livelihood Northwest, I mentioned, Inclusive Business Resource Network, that will get you to a lot of different organizations in town. Individual development account, this is going to send you to Wave. This is all different options for getting your taxes done for free. All these Instagram accounts that offer support, all these other resources and books I mentioned. And then this is the additional information, because I've been talking almost nonstop for 2 hours. And there's so much more to talk about. So owner pay, 1099s, getting in touch with the IRS. So I mentioned how to set up an online account. There's steps on how to do that. That Corporate Transparency Act that someone asked about, and the BOI filing, I've got a slide about that. Health insurance and retirement, fundraising through your business. I find this to be a really important thing to talk about with folks, especially in light of the government that we are now going to have. I already can tell an uptick in mutual aid and fundraising, and I want to make sure that we are not having to pay tax on any of that money. Penalties and interest, auto expenses, that actual expense method, and personal property taxes. So there's slides about all of that with links.